Peace and love, good people. Peace and love. Welcome to another episode of Money in Minutes, March 31st, 2025. And we're back with another Tesla trade. All right, so here we go. We have a tail bar forming at a level of resistance at the open. So this is the bottom of a gap. This 250.03 is the bottom of a gap, which it put me in a mindset, of course, to concern myself with whether or not we're going to fill this gap or continue to the downside. And I'm basing my opinion off of the gap, not necessarily what's happening here. But as some of you may recall in previous episodes, we have been able to see this tail bar form here and pretty much be the start of a downtrend for the day. And we've also seen this tail bar start here and reverse on us when we jumped into early. So for all intensive purposes, I am going to hold off. And also we are here at the open, so we would at least need a second candle. I think jumping in that first candle, outside of it being an elephant bar, a Marubozu, a power bar, however you want to describe that big long candle to the upside or downside, that is typically the only time we jump into a bar, that first candle. And if we do jump into that first candle, we are not going to do that until about 90 seconds have passed. All right, so boom, here we are with the second candle forming. Now, again, hindsight is always 20/20. So when we look back at this thing and we see that it went down, it's easy to say, damn, we should have jumped in there. But I think it's also very important to wait to see what's going on. I'm actually torn between my strategy. So I've written down a daily trading plan for April and a journal entry. I got a booklet of journal entries already prepared. I just need to fill in the blanks for April. So today is my last day trading this way. And then I'm going to try to honor my rules that I've written down. And one of my rules is to not enter any trades that are not near the 20 period moving average. Okay, so this particular morning, I'm trying it out. We're on a 2-minute time frame, but ultimately I am waiting to see if we get closer to the 20 period moving average, the upside or the downside, and I'm going to wait until that moment to enter a trade. I'm going to wait until and then I'm going to make sure that I trade the same direction as the 20 period moving average is going in. So this can be kind of tricky if it looks flat. That's kind of a difficult part. If it looks flat, is it going up or down? So we'll cross that bridge when we get there. But right now it's like, man, if I would have jumped in to this Marubozu or elephant bar or power bar, whatever you call this big red candle, that might have been a good scalping opportunity. Very good scalping opportunity right there. Might have been a very good scalping opportunity, but at the same time, normally the Marubozu or the elephant bar or the power bar has some continuation after it. So if you see that big bar, there's normally continuation after that candle forms. So this is kind of giving us a sense of some market manipulation, or we could in fact be at the bottom. We could very well be at the bottom. And this also looks like the formation of a bullish reversal. So if this is this little doji tail bar in the middle followed by a big green candle to the upside, would be in fact the bullish reversal pattern. So if you were looking to scalp a quick move up from 244, maybe at least halfway up, this red candle here, this might be a good entry opportunity. I did not take that. Why? Because I am trying to stick to my rules. my new established rules of trading near the 20 period moving average. Okay, so here it looks like we get a little continuation to the downside, but it ultimately pulls back up and goes in the direction in which we said this bullish reversal pattern would do so. So again, now pay attention. As the time goes on, look at the moving averages. They're moving closer and closer to the action, just like an average does. Average, remember in high school, we went over mean, median, and mode. Anybody remember that? Mean being the average. So as new candles form, they're going to pull or push the moving averages closer or further away. And we're looking to be at that 20 period moving average. That price point is a good place to enter and look for some type of a confirmed move up or down. Okay, so right now we're far away from the 20 period moving average. Some might think this is a great time for a call. Some might think something different. So it ultimately depends on you. It ultimately depends on you. So there we go. What your preference is, what your plan, and what your strategy is. So I'm looking, ultimately, we will be looking for continuation to the downside or a move back towards resistance. So what I'm doing now is I'm marking off the high and low of the first 5-minute candle. How you doing, Stock Market Melody?
Good.
So what color candle is that?
Red.
This one.
Green.
Green candle. Okay, so we just marked off the high and low of the first 5-minute candle. So this is the opening range. So we're looking for a break down the bottom of this range or a break through the top of this range. All right, so even when we switch back to the 2-minute time frame, we can still see it. So we're waiting for this break for the next 10 minutes.
Okay, Stock Market.
I'm good, Stock Market Melody. So we're waiting for another 7 minutes for something to happen or for us to break out of the 15-minute range.
We wait for 7 in a minute.
Yes, we are waiting for 7 more minutes to break out of this range. So as you can see, we had this big red candle, the Marubozu, to the downside, to the bottom, to the low of the first 5-minute candle. We pulled back to about the halfway mark, and now we're continuing to the downside. Okay, continuing to the downside, and we're being mindful of our 20 period moving average. We're only taking trades near the 20 period moving average. You can see the price to the right, you can see the price above, and you can see the green line. All three represent the 20 period moving average, and that's what we're looking at. So right now we're trading at 245.30 and we're looking for 254.27. Okay, so we could easily we could consider.
We have money.
Yes, we could
The law. And pullback.
Yes, that is a pullback. Girl, that's right, girl. You on point. That is a pullback. Stock Market Melody. Knowing what you talking about. Say it again. That's a what? A pullback? Okay, so we don't want to confuse reversals with pullbacks. Okay, so here we are in the 15-minute time frame. All right, we're on the 15-minute time frame. Looking at the high. Look at this blue line right here. That's the high. You see this blue line down here? That's the low. So we're looking to see this little candle right here. You see it?
What?
This one right here.
Red.
Right, the red one. We want to see it come past this blue line. All right, if it closes past this blue line, we'll look for a quick retest and continuation to the downside.
Really?
Yes, really. That's our plan. We'll see if it works, but that's our plan. All right. And we can see on the 15-minute time frame, again, we're far away from the 20 period moving average. So we're also going to look at SPY, because SPY seem to be doing the same thing. All right. But SPY has broken below the 15. Okay, back to Tesla. So yeah, we're going back and forth from SPY to Tesla, looking for an opportunity. Instead of harassing Tesla, we were gonna consider trying an additional stock right here. This is SPY. Say SPY.
Spy.
Yes, we're trading SPY and we're trading Tesla. Say SPY and Tesla.
Spy and Tesla.
Yes, we are trading SPY and Tesla. So here's SPY on the left, and here is Tesla on the right.
Yes.
Yes. Okay. So here we are on this. We are mistakenly on the 1 minute time frame. So let's get off of there. Let's go to the 15-minute time frame.
All right.
All right. And we have, okay, we're back at the 2 minutes. So again, on the 2 minute, we're getting closer to this entry. Now we have a pin bar at the 20 period moving average. Okay. So I'm looking at this thinking, we finally made it to the 20 period moving average. We are about to go down. So boom. Right. So this is an opportunity on the SPY. Tail bar near the 20. And we are going down. Throw this in the trash for me. Throw it in the trash. And we are going down. Look at that. So of course, what do? I jump in here, ready to buy a put to the downside. Okay. But what I'm not considering is this big uptrend where we've already changed the direction of the trend. We are at the 20 period moving average and the resistance, the high of that 5 minute range. Even though we're on a 2 minute time frame, you can still see the resistance level that was drawn. So that triggered me to believe and have faith and confidence that we were going to the downside. However, I waited too long. To enter. And now what I'm seeing seems to have switched to a red bar ignored. So 2 green bars ignoring the red bar. Okay. Stop, Pooh. And now it looks like we are going up. Now keep in mind, look at my stop loss. This is another problem that I'm having. I'm getting so caught up in wanting to win, wanting to be right, giving myself more time to be right. I'm not acknowledging and accepting that I'm wrong. So here we are, 34. I should have got out to play. But I'm also saying, well, let me let this candle close, because typically if I'm trying to practice waiting until the candle closes to enter the trade, with very few exceptions. So this is an instance where I'm looking to wait for the candle to close before I exit the trade. And again, look at me, -42. I'm way beyond my stop loss. I did do a good thing. As we noticed, this does look like a nice pop, a nice burst of momentum near the 20 period moving average. So it is something to say about waiting until we get back around that 20 period moving average, so we can ultimately see what the next move is. Now I waited. Now I made a decision to enter a trade because we touched the 20 period moving average on the 2 minute time frame. However, I did not use the 15-minute time frame properly, or the 5 minute, because I should have waited to see the candle close outside of our opening range before I entered. And once I saw that, I should have went down to the 2 minute, or waited for a retest here at the 2 minute based on the levels of the 15 minute. Okay, so I didn't do that. I jumped the gun a little bit. And I think had I waited a bit more, I may have gathered the information needed to make the right choice. But I jumped in there. Boom. So now here I am. I'm down 50 on this SPY put, and I'm refusing to put myself out of my misery. Also consider that this SPY, I believe, is a 0 DTE, which means that, it's going to have to get lower and lower and lower to even break even as the time goes by. So I made the same mistake entering this Tesla trade. looking at this uptrend, these red candles that hit the 20 EMA, I'm looking at them as a stop. I'm looking at them as a reversal, not a pullback. Say reversal, not a pullback.
Not a pullback.
Right. So these are pullbacks. We're already trending up. This stock is taking a breather, preparing for the next leg up. And in a moment, I'm not capturing that information. I'm so caught up on the patience part. Oh, I'm trying to be patient. I'm so focused on patience that I'm not capitalizing on opportunities or interpreting what's happening fast enough. Okay? So that's something that I need to work on. And of course, my age-old issue. Stop, let it go. My age-old issue, respecting my stop loss. So this SPY play should have been cut. This SPY, look, and now we're on the 15-minute, and as you can see, this candle has not closed outside of the 15-minute range. So while my inputs and on the 15-minute, we're obviously bullish, and I could have waited for this candle to close and then entered a bull move. And same thing on the SPY play. Same thing on the SPY. I should have let this candle close, and I should have respected my stop loss. Peace and love, good people, and I hope you get rich.